Thanks everyone for coming. Hopefully one of those keywords in the title attracted you guys to come. So quick background. My name is Tim. I lead global strategy at Mantle. I spent the last 15 years mix of buy side, sell side on Wall Street, and also the last 5 years partner at a multi-billion-dollar venture capital fund backed by sovereign wealth funds. We did a lot of Web2 companies like Klarna, Nubank, Palantir, etc. We're also started Bitcoin mining operations at that fund, and then transitioned to leading global strategy at Mantle. So there's some seats up here. So for most of you guys, you probably know what Mantle is as an L2. We also have a couple other products. For example, we've built METH, liquid staking protocol, as well as Function BTC, wrapped Bitcoin instrument, both of which are about billion plus TVL. And more recently, we announced the launch of Mantle Index 4, an index basket of majors that's close to about 200 million TVL, as well as the launch of UR, our unified crypto and fiat neo-banking product recently. So why is that important? That's important because the vision for us at Mantle is to bring crypto to your everyday. The two metrics that I look at on the scoreboard are how do we enable the next billion users into crypto, and how do we enable the next $1 trillion of capital to flow into crypto? This is relevant because all that ties into how do we get to 80k ETH? So without further ado, all right, so let's take a step back. Did we all forget where we came from, where ETH came from last cycle, right? Sure, a 10x seems like nothing these days, but the road to 4K was very glorious in the sense that it left behind a tremendous amount of innovation, right? Today we can look at players like Uniswap, Compound, the invention of things like farming, staking, airdrops. A lot of this was coded in the last cycle. We also had some products that were good shots on goal, but still have yet to find clear product market fit and longevity, such as play to earn, where I'm sure folks are innovating on the gaming model, as well as who remembers 5,000 first days sold for 69 million, now worth something less than 100. NFTs, right? There are different instances being reborn every single time. And what I want to take here is that, look, the innovation that happened on ETH last cycle had rippling effects into where we are today. So let's not forget that. All right. So what does this mean, right? What this means is, look, at the end of the day, we all know that price action is the value everyone looks for, notably upwards price action. And price action begets interest, speculation, and innovation, right? This all came from the fact that ETH pumped to 4,000, anything was possible, right? So where are we today? Not so good, guys. So in the last 12 months, ETH is down 30%. We all know that. So it then begs the question, okay, if ETH is not doing so well, where's the party? The party's moved off chain. If we look at some of the comparables that trade in the public equity markets today, namely Coinbase, MicroStrategy, and Circle, you'll see that there's outsized demand for these products. Coinbase is up 75%, MicroStrategy 165%, and Circle, oversubscribed on its IPO, pumped 5, 6, 7x since IPO. That tells me there is a significant amount of sidelined institutional capital waiting to be deployed into crypto. The only challenge is it has to be in products and wrappers that are regulatorily kosher for the SEC. Now, I only focus on the US markets because it is the largest and most liquid market in the world. All right, so what does this mean for ETH and on-chain? Well, look, the institutions are coming, it's just not on-chain yet. If we look at DeFi Llama today, DeFi is about 110 billion TVL, have about 250 billion in stables. That's neat. But Bitcoin ETFs alone have about $135 billion in AUM, which is impressive, noting that IBIT, which is BlackRock's ETF, garnered 70 billion in just under 1 year, making it the fastest growing ETF in history. Now, most of you guys probably don't care about ETFs. You probably don't even know how to buy one, which is fine. But what's important here is that the global AUM of ETFs is about 14 trillion, and this is less than 1% of that penetration. Now, as someone who had launched ETFs in the past, non-crypto related, I can tell you the thinking that goes into allocation, you start at 2% if you want to dabble, and you can go all the way up to 10% if you want to put size on to something that's not primary to your investment portfolio. So that means there's anywhere from a 2 to 10x more upside in capital flowing into this space. By the way, Ethereum is only 1/10 the size of Bitcoin ETFs, so we're expecting a lot more upside once the staked ETFs come. All right, so what does that tell us? Okay, cool. Price action begets interest. We all know that. And in order to have that price action, we need net new capital to come into the space. Most likely, that net new capital will be primed and coming from TradFi. Cool. So what is TradFi preoccupied with today? I don't know how many of you guys are TradFi background, but when we had DeFi summer a couple years ago on chain, TradFi is experiencing a DAT summer. What is a DAT? Well, if you look at some of the returns, they look like on-chain returns, 5,000 some percent, 3,000%. But these are public equities trading on the US stock exchange. So first one, top is my buddies at UTXO did MetaPlanet out in Japan. It's a MicroStrategy competitor. They arb the tax arbitrage out there. It's about 30%, I think, to if you sell crypto, it's 18% long-term cap gains. And they took a $20 to $25 million market cap real estate company into a $7 billion Bitcoin accumulator. You have other players like DFDV, who's doing this for Solana, right? They're adding a yield component to their staking. You also have our champions for ETH, Joe Lubin and SBET, which is further down. So there's a lot of players doing this in the market today. Now the question is, why is this hot? Why is this interesting? How many of you guys know what digital asset treasury is? Okay, cool. All right, so let me simplify for you guys. A DAT is when you take a crypto token, wrap it in a TradFi wrapper that's regulatory compliant, and you sell it to the capital markets. It's a wrapped asset for, Eli 5 for people in crypto. Now, what's interesting here is the road to creating a DAT is rather straightforward, but there are a lot of devils in the details. First, you raise capital from investors. It could be either equity or debt, mix of both. Then you acquire a publicly issued vehicle. So this can be done via a SPAC, an RTO, PIPE, various ways. I won't get into the details here. Lastly, your sole job is to accumulate that one coin in your treasury, because the sole purpose of a digital asset treasury vehicle is to create a financial instrument to the capital markets that TradFi can buy as a pure play. If someone wants to put on a pure play exposure to Solana, Bitcoin, Ethereum, they can buy DFDV, MicroStrategy, SBET. All right, so what are the keys for success? Really, there's only 3. The first is asset selection, right? If you pick something that's on second, third page of CoinMarketCap, probably not going to make it. Second, deal structure. This is highly crucial because, again, you guys aren't TradFi, but if you're scrutinizing the documents that come out, the filings when these guys go public, you'll notice that in the past couple of months, there have been a flood of these putting the nth, Bitcoin treasury at play. When you dig in, these guys are getting their faces ripped off by banker fees, warrant overhangs, etc. Long story short, this is the equivalent of looking at a token's TGE and realizing everybody's going to unlock before you. So lastly, what's important is you need to have the right backers and the right marketing team behind you. Why is Saylor so successful? He never talks about MicroStrategy. He only talks about Bitcoin. He promotes the asset, he educates the market, and he gets people excited about it. He's built a cult. So in order for SBET, for example, to do the same thing, Joe Lubin needs to take a page out of Saylor's playbook. All right, so for those of you who are familiar or I've heard of DATs, there's a lot of FUD in the market as to, oh no, these guys can trade at a discount MNAV like GPTC, we're all gonna blow up. Incorrect, because these are publicly traded vehicles. You can sell in and out anytime you like. They're fully liquid. Second, folks will say, oh, it's like the SPAC bubble, right? In 21, where you took all these companies public and they are only down only. The difference is those were actually tech companies with no real revenue, no real moat, some outright frauds that went public. Here, there's actually real market tangible value. For example, if you launch a SPAC with a treasury of Ethereum at $100 million, chances are, you're going to trade close to that, if not at a premium, sometimes at discount. Lastly, a lot of folks will say, oh, there's too much leverage in the system. Eventually that debt will unwind and we'll go kaboom. It's not unwarranted, but most of these are done via equity investments. And so you're not as levered as you'd think. All right. Oh, cool. So I was talking to Eric Balchunas. He's a big Bloomberg media personality on ETFs. I believe that DATs are better than ETFs for crypto adoption, right? So now this is getting a little technical, but the key focus areas are, look, today's day and world, everyone operates on an internet hive mind. Everybody's information is synchronized, and for you to make a purchase decision, it's one click on Robinhood or whatever broker your choice. What that means is people are looking for leverage, right? Why are meme coins all the rage? So the key components of DAT is why I think it's superior to. One, it is an inherently leveraged vehicle. These things sometimes trade at 2 times the book value, sometimes up to 10 times. Whereas as an ETF, you're generally always going to trade at 1 times NAV. Furthermore, the DATs lock supply, right? If you go out to the market and you launch a Bitcoin treasury, and then 1 month later you start selling your Bitcoin treasury, you're going to get punished. The market will start selling your stock. So these guys are inherently incentivized to lock up and take supply off the market. Lastly, memeable and cultish, right? The winners are going to be the ones who have the right personalities and come into market. Why was Pompliano able to launch a $700 million SPAC on Bitcoin? Because he has a right follower base that otherwise would not buy other BTC treasuries. Cool, so let me get into some nitty gritty and just simplify for you. We talked about this multiple called MNAV. What is MNAV? Why is it the king multiple? And why is coin per share the metric? Basically, TLDR is like, you've probably seen on your feed, everyone is doomsaying MicroStrategy will eventually blow up, the MNAV will trade down, yada, yada. And I think they kind of missed the point. So my buddy Cosmo is a partner at Pantera, elucidates this quite easily. So today, if you buy 1 Bitcoin and you hold it for a year, you're gonna have 1 Bitcoin, right? However, if you buy MicroStrategy, it's trading at 2 times book value. You're essentially buying half a Bitcoin. But because these are capital market vehicles and MicroStrategy can raise capital via issuing more debt or selling stock against it, he can increase his Bitcoin per share. And therefore, he can grow his Bitcoin holdings on a per share basis. So if you buy 1 share MicroStrategy today, and he's able to raise capital, increase BTC per share by 50%, then you have 0.75 BTC represented by 1 MicroStrategy share. And that is how financial alchemy is made. So, case in point, last 12 months, Bitcoin's up 75%, MicroStrategy's up 155%. All right, so what does that tell us? That tells us, all right, net new capital has to come into the space via the form of traditional institutions. How are they going to do it? They do it via the hottest kid on the block, which is a digital asset treasury. That's the Trojan horse to drive adoption. All right, so what does that mean for Ethereum? Well, like we said, Joe Lubin is coming in as chairman for SBET. They raised about $425 million for an Ethereum treasury vehicle. But that in and of itself is not differentiated enough. There's a reason why ETH, ETF, AUM is 1/10 the size of Bitcoin's, right? The differentiator, as we all know, is the yield, is a native stake yield, what is it, like 4%, that can go back to holders. So there's some interesting developments in the works. For example, there's a publicly traded company that announced that they will put METH on their balance sheet. Furthermore, MI4 Fund announced that with their index basket, the differentiator is it's not just a basket of Bitcoin, ETH, SOL. It's a basket of Bitcoin, staked ETH, staked SOL, and a yield-bearing staple. Because by adding in a yield component, you're targeting a whole different set of investors who are looking for yield. So yield, I believe, is the next evolution in digital asset treasuries, right? The 2 key things that you have to take away from why is yield better than a non-yielding treasury. The first, staking yield augments your coin per share. This makes sense, right? If you hold Bitcoin, it's unproductive today. If you hold Ethereum, you can stake that, get the yield, use that to buy more Ethereum on your balance sheet. Second thing you can do with that is how to hedge against the risk when people say, oh, you're going to trade at a discount to your book value, right? If you're holding Bitcoin and you trade at below book value, if you hold any digital asset treasury, you trade below book value, the logical thing to do is buy shares in your company because it's undervalued. But how do you do that if you have no cash on your balance sheet because you're holding an unproductive treasury asset? That problem is mitigated if you hold something like Ethereum because you're generating staking yield. And if you manage your treasury well, hopefully you have some cash on a balance sheet for a rainy day and you can buy back your shares if whenever you ever trade at a discounted MNAV. All right. So I know this is a lot of technical jargon, hopefully not too big brain, not too difficult to understand. So I want to move into something that we can all appreciate, as I'm a connoisseur of memes. So the next Ethereum narrative, what does it need to be? Guys, we can't keep pitching the next ZK, permissionless, L2, L3, other alphabet soup. That's not going to get people to adopt Ethereum. It needs to be treasury asset with yield, a DAT. So why is this important? It's important because Wall Street today now understands how to value a DAT. Their army of analysts know how to plug these into their DCF models, throw an IRR, and tell the bosses up top, hey, we can expect XYZ IRR. Cool. Now, why don't we give them a better asset that generates yield to make their models look even better? So you can't go against the grain. You have to go with what they already understand and go with the path of least resistance. So to sell into TradFi, you have to sell a story of treasury asset with yield. So what do we learn? DAT is a Trojan horse for adoption. Treasury asset with yield has to be the next narrative for Ethereum to garner meaningful capital as a DAT. Where are we? We're still early. Ethereum has not been adopted by large institutions and pension funds, to my knowledge, and so we have a long ways to go. Let me just straight into what happens if we believe Ethereum is a treasury asset with yield. What does it unlock in the mind of Wall Street? So this is put together by my good friend Vivek at Etherealize. They put out a great report called ETH Digital Oil. Look, today gold is 22 trillion. But with yield, we can start thinking about ETH as a global bond market or the global M2 supply. If you can't see, those are $140 trillion markets. So if you just do high-level math, and oil, right? I think there's an argument to be made that ETH is much more similar to oil because it's a productive asset, shares similar scarcity and supply dynamics, and that's an $85 trillion asset class. So when you take the average, that's 85 trillion. Now, I'm not that bullish, so let's taper expectations. Medium term, I think we can get to a 10 trillion market cap, and that's how we get the road to 80,000 ETH. Cool. So if we believe that ETH's next narrative is treasury asset, there's a bull case to be made that ETH can ultimately reach $80,000 per ETH. It's a tide that lifts all boats. When we play together, we win together, everyone wins. Here's some catalysts for repricing ETH. The most important one is the elephant in the room, which is like Fed rate cuts. Guys, T-bills are 4%, ETH native stakes 4%. President Powell has immense pressure to cut rates another 250 bips. When that happens, you're telling me a lot of capital won't flow into ETH? I bet it will, and when that happens, we'll see a large repricing on the ETH price. Lastly, now you guys are probably wondering where Trump comes in all this. So Trump is a businessman, has a great nose for what makes money. So what makes money in crypto? Tether is a stablecoin, Binance an exchange, meme coins, Bitcoin miners, Bitcoin DATs. So naturally, what has he done? He's copied every single one of them. So as a proxy for success, to know that whether or not Ethereum has made it is if Trump starts bull tweeting Ethereum and if he starts creating an Ethereum digital asset treasury. All right, so what did we learn? Ultimately, look, we all need price action to get the cycle moving again. Price action comes from net new capital into the space, largely primed today from TradFi. For them to come into the space, the best Trojan horse today is a digital asset treasury. In order for us to sell that narrative, it has to be treasury with yield for Ethereum. And if we can believe in that, we can believe there's a path to $80,000 ETH as a bull case. And then lastly, cherry on top is if Trump copies it. So if there's one takeaway I can give you guys from this, it's let's believe again, all right? Ethereum is a treasury asset with yield. Thank you.
We have time for one or two questions.
So MicroStrategy also offers STRK and STRF, which also pays a perpetual yield. Where is that coming from if Bitcoin is a non-productive asset and MicroStrategy is basically just losing money with their core business?
And could this also be potentially in, yeah, this topic?
Yeah, you're talking about Strike and Strive and Stride. So essentially, they've recreated what is essentially a perpetual in the capital markets. And by doing that, they're able to target new buyers, right? Yield investors, right? If you're bullish and you want a junk bond, you can buy, I forget which one. If you're more conservative, you buy the other one. He's a financial alchemist. And more importantly, this shows you the roadmap of where this can go. Today, a digital asset treasury is mostly equity. You buy the spot, you try on MNAV. In the future, you move into credit, which is a much larger capital, which is a much larger market. So can Ethereum get there? Yes, but we have to start with, for example, the guys like SBET and get them up and going first.
The question is, like, how much does adoption correlated with the price of Ethereum? That right now a lot of value is captured by L2s and roll-ups. I think.
Yeah, so the question is, how much does adoption matter if most of the value today is captured by L2s? I assume you're talking about liquidity being fragmented. Look, on-chain, as you saw, we've probably come back to where the all-time high is on DeFi, but it's really left pocket, right pocket. Everyone's just rehypothecating the same capital left and right and generating new memes, narratives for people to move the hot ball of money. You still need net new capital to come into the ecosystem. Even if it's not on-chain, a good first step is to at least buy Ethereum or Bitcoin or any digital asset from folks who previously had not had that exposure.
Do you think that the ultrasound money narrative still make any sense?
Look, if you talk to any TradFi guys, like myself who have experience, I have no idea what that means.
Well, Ethereum could be deflationary.
Yes, but it could be deflation. Yeah, yes, I understand. But if you talk to a TradFi guy, they're thinking, okay, how do I make money off this? What does that even mean? But if you tell them, hey, I'm looking at what's making money on NASDAQ today, who's the best return, it's MicroStrategy. What is that? Oh, it's a digital asset treasury. Well, what if you could do the same, but with Ethereum that generates yield? That makes sense to them. So I think ultrasound money is a good narrative for crypto natives, but for TradFi adoption, like Wall Street guys, it has to be something much more on the nose.
Does Wall Street look further than that? Like, as it looks now, the Solana ETF is also coming probably at the same time that the Ethereum ETF is coming. Solana ETF has a higher nominal yield, Ethereum a higher real yield. Will Solana look into that, like, TradFi look into that Solana is just issuing more, or are they just as retarded as we are?
So there's a different asset for different allocators at different risk profiles, right? So if you guys don't know, there's an ETP called ASOL out in Europe. It's about $1 billion in staked Solana as an ETP out in Europe. That already exists today before the likes of DFDV and UPEXI created the digital asset treasury for Solana. Now, for example, DFDV started at 50 mil market cap and it pumped to maybe 600 at its peak. So there's definitely demand. It's just more, the question is more like, who's going to buy into that story? Well, I can tell you TradFi has much more magnitudes of capital than on-chain, and so there's plenty of depth.
Another question, kind of just from your perspective, when do you think we're going to start to see more TradFi assets on chain? So things like equity-backed stable coins, stable coins that are bond-backed.
So what is the last question? Because we have to move on. Yeah.
Oh, can I answer this? Okay, sure. All right.